Welcome to today's deep dive. We're going to be looking at an article from the Motley Fool.
All right.
It's called Two Brilliant Growth Stocks to Buy Now and Hold for the Long Term. And they have a really interesting argument.
Oh, yeah.
They think the world's about to invest trillions into digitalization and decarbonization, and it could mean huge opportunities for investors.
Yeah, they highlight two companies they think are going to benefit the most from this whole Brookfield infrastructure and Constellation energy.
Yeah. But before we even get into the companies themselves, I'm curious about those super cycles they talk about.
Oh, yeah.
What does that even mean?
Well, imagine like a giant wave of economic activity, but instead of crashing on the shore, it keeps going for like years.
Oh, wow.
Even decades.
It's a super long.
It's a really long period of growth.
Okay.
Driven by some fundamental shift in how we do things.
So how did digitalization and decarbonization fit into that then?
Well, think about everything that's changing around us right now.
Yeah.
Like the explosion of data, AI, the move to renewable energy.
Right.
These aren't just separate trends.
Yeah.
They all affect each other.
Interesting.
As we go digital, we need more computing power, and that needs more energy. But at the same time,
Yeah.
we're trying to make that energy cleaner and greener.
So it's like this double investment. We
Yeah.
need to build new stuff for both the digital and energy worlds.
Exactly. And that's where the opportunity comes in.
Makes sense.
Companies ready to supply the infrastructure and tech for all this are probably going to grow a lot in the coming years.
Okay, that makes a lot of sense.
Yeah.
So where do Brookfield infrastructure and Constellation energy fit in?
Well, they're great examples of how to be a part of these trends, but in very different ways.
Okay.
Brookfield's like the backbone of the real world.
Okay.
They own and operate a huge network of utilities, transportation systems, data centers, even semiconductor fabrication plants.
Whoa, hold on. Semiconductor fabs, that's like
Yeah,
the core of the digital world.
exactly. And that's what's so cool about Brookfield.
Oh.
Everyone's looking at the flashy new tech companies.
Right.
But Brookfield is quietly building the foundation they need.
I see.
They're literally building the roads, the power lines, the data centers
Wow.
that make the digital world possible.
Yeah. And on the other side, we have Constellation Energy.
Yeah.
They're all about powering this new world with clean energy.
They're the biggest clean energy producer in the U.S.
Wow.
with tons of nuclear plants and a growing portfolio of renewables like wind and solar.
Yeah, the article mentioned their deal with Microsoft to restart a nuclear plant. That really caught my eye.
Yeah.
It seems even the tech giants are getting directly involved in energy now.
It really shows how these trends are merging together.
Yeah,
Microsoft needs clean energy for their data centers,
right.
and Constellation can give it to them. But this deal raises some interesting questions, too.
Like what?
Like, how will these companies decide what to invest in first?
That's a good point.
If data center demand explodes, will Brookfield focus on building more data infrastructure,
Right.
even if that means slowing down on renewable energy projects?
Yeah, you're right. It's not just about riding the wave.
Yeah,
There could be some tough choices to make along the way.
absolutely. And that's something we'll want to keep in mind
Yeah.
as we look closer at each of these companies.
Okay, so let's start with Brookfield Infrastructure.
Okay.
The article highlights their super diverse portfolio.
Mm-hmm.
What are some of the key areas they're investing in, and how do those connect to digitalization and decarbonization?
So Brookfield has four main segments: utilities, midstream transportation, and data infrastructure.
Okay.
Their utilities segment includes things like electricity transmission and distribution,
Okay.
natural gas pipelines, and water systems.
Got it.
This is where they're seeing the impact of decarbonization
Mm-hmm.
as the demand for cleaner energy is driving investment in renewables
Okay.
and grid modernization.
So they're not just providing the old energy infrastructure.
Right.
They're involved in the move to a cleaner energy future.
Exactly.
Okay, cool.
And then there's their midstream segment
Mm-hmm.
that focuses on transporting and storing oil and natural gas.
Wait, wouldn't that be going against the whole decarbonization thing?
It might seem like it,
Yeah.
but it's actually more complicated than that.
Okay.
The world is moving away from fossil fuels, yes.
Mm-hmm.
But natural gas is seen as a bridge fuel
Oh,
to help us get to a lower carbon economy.
okay.
And Brookfield is part of that.
How so?
They're investing in pipelines and storage for natural gas,
Okay.
which has much lower emissions than coal.
So they're hedging their bets a little.
Yeah.
Knowing that the change won't happen overnight.
Exactly. Then there's their transportation segment,
Okay.
which includes things like toll roads, railroads, ports, and airports.
Right.
This is an area that benefits from both digitalization and decarbonization.
How so?
Well, as e-commerce grows,
Mm-hmm.
the need for efficient transportation networks goes up too.
Right.
At the same time,
Okay.
there's a push to lower emissions from transportation.
I see.
So they're investing in electric vehicle charging stations and more fuel-efficient vehicles.
So Brookfield is set to benefit from both the increase in goods moving around
Yeah,
and the shift to cleaner ways of transporting them.
exactly.
Got it.
And then, of course, there's their data infrastructure segment.
Right.
That's where they're really tapping into digitalization.
Okay.
This includes data centers, telecom towers, fiber optic networks, and you guessed it,
The fabs.
the semiconductor fabs.
Wow. It's like they're building the physical internet.
They kind of are.
That's amazing.
And as the demand for data storage processing and transmission keeps growing,
Yeah.
Brookfield's in a great spot to profit from it.
So they're not just playing one side of these super cycles.
Right.
They're in a position to benefit from both digitalization and decarbonization.
Exactly.
Wow.
And that's what makes them such a fascinating company to watch.
Yeah, for sure.
They're not just focused on one trend or the other.
Right.
They're this diversified infrastructure giant
Yeah.
that's poised to benefit from how these two huge forces
Mm.
are changing the world economy.
This is so interesting.
Yeah.
I can't wait to dig deeper into Brookfield's growth strategy and what it means for investors.
Me too.
And we'll do just that in part 2.
Awesome. We'll also look closer at Constellation Energy and how they're using their nuclear know-how to become a leader in clean energy.
Can't wait. Stay tuned for part 2 of our deep dive, where we'll cover all of that and more. Welcome back to our deep dive into Brookfield infrastructure and Constellation Energy.
It's good to be back.
In part 1, we talked about how these companies are in a good spot to benefit from these super cycles of digitalization and decarbonization.
Right.
Now, I want to understand how Brookfield's diverse portfolio actually means growth and returns for investors.
Yeah.
The Motley Fool article throws out some pretty big numbers.
They do.
And to understand those, we need to know how Brookfield grows.
Okay.
And how that turns into value for shareholders. So let's start with that 10% plus annual growth in funds from operations,
Okay.
or FFO that they mention.
Mm-hmm.
Can you explain what FFO even is
Right.
and why it matters so much for infrastructure companies like Brookfield?
So FFO basically measures the cash flow that comes specifically from a company's operations.
Okay.
It's the money coming in from their actual business activities.
I see.
It's really important for real estate investment trusts or REITs like Brookfield
Okay.
because it gives a clearer picture of their profits compared to just looking at traditional earnings.
So why is FFO better than regular earnings for a company like Brookfield?
Well, traditional earnings include things like depreciation and amortization.
Okay.
Those are accounting ways to spread the cost of an asset over its lifetime.
Mm-hmm.
But for companies with big physical assets,
Yeah, like pipelines, toll roads, and data centers.
exactly,
Those
those
are-
depreciation charges can be huge
Right.
and don't really show the actual cash flow those assets are making.
Ah. So FFO helps us see past the accounting stuff and shows us how much cash they're actually making day to day.
Precisely.
Okay.
And for a company like Brookfield,
Yeah.
that's always buying and building new infrastructure.
Right.
FFO is a much better way to see their true earning power.
So that 10% plus FFO growth they're predicting,
Yes.
does that mean they expect to make way more cash every year?
That's exactly what it means.
Okay.
And that steady cash flow growth
Mm-hmm.
is a big reason why investors are interested in Brookfield.
I see.
It lets them do a few key things:
Cool.
pay dividends, reinvest in the business,
Okay.
and potentially increase their share value over time.
Okay, let's break those down.
Okay.
Starting with dividends.
All right.
The article said Brookfield has a dividend yield of around 4%,
Right.
with the potential to grow 5% to 9% each year.
Yeah.
Can you tell me why dividends are important for investors,
Sure.
especially those who are in it for the long haul?
Dividends are like a regular paycheck
Okay.
you get from owning part of a company.
Makes sense.
And for long-term investors,
Yeah.
those payments add up over time,
Right.
especially if the company keeps increasing those payouts.
It's like getting paid to be patient,
Exactly.
but they're not just handing all their cash to shareholders, right?
Right.
What about reinvesting in the business?
Oh, yeah. They put some of that cash flow right back into funding acquisitions
Okay.
and development projects.
Hmm.
That's how they grow their portfolio
Okay.
and take advantage of new opportunities.
So it's a cycle. They make cash,
Right.
pay dividends,
Hmm.
and reinvest to make even more cash.
Exactly.
Got it.
And that's a big part of what makes Brookfield so attractive.
Okay.
For long-term investments, they've got a solid business model, a strong management team
Mm-hmm.
with a history of success.
Yeah.
And they're in an industry that's only getting more important.
Speaking of expanding their portfolio, the article mentioned their acquisition strategy.
Yes.
It seems like they're always looking for new things to buy.
They are.
How do they decide what to buy?
Well,
And how do they make sure they're not overpaying or making bad deals?
that's a really important question.
Yeah.
Brookfield is very strategic about their acquisitions.
Yep.
They really know the infrastructure market.
Yeah.
And they're disciplined about evaluating potential deals.
So they don't just buy anything.
No. They're looking for things that meet certain criteria.
Okay. What kind of criteria?
Strong cash flow,
Mm-hmm.
long-term growth potential,
Okay.
and how well it fits into their existing portfolio.
So they're not just chasing the latest shiny thing.
Nope.
They're strategically building their portfolio to capitalize on these megatrends.
Exactly. They're looking for things that are essential to the digital
Right.
and decarbonized economy of the future.
Okay.
Things that will be in high demand for years to come.
Makes sense.
And because they already have such a diverse portfolio,
Yeah.
they can be more picky,
Okay.
more patient, waiting for the right opportunities.
So to sum it up,
Yeah.
Brookfield's growth strategy is about growing organically through their existing assets and making strategic acquisitions
Yes.
to expand their reach and capabilities.
You got it.
And this multi-pronged approach helps them make consistent cash flow,
Right.
pay good dividends,
Mm-hmm.
and reinvest in their business,
Yeah.
all while taking advantage of these huge trends shaping the global economy.
Exactly.
Okay, so let's move on to Constellation Energy.
Okay.
In the first part, we touched on their role in the clean energy transition
Right.
and their focus on nuclear power.
Mm-hmm.
I'm curious to learn more about their business model
Yeah.
and how those power purchase agreements or PPAs fit in.
Constellation's whole model is about providing clean energy to utilities
Okay.
and big companies through these PPAs. It's
Yeah.
basically a long-term contract
Okay.
where Constellation agrees to sell a certain amount of electricity at a set price.
I see.
These contracts usually last 10 to 20 years.
Wow.
So they get a steady and predictable income.
So it's like locking in customers and revenue for years.
Exactly. And that's really valuable in an industry that can be affected by.
Yeah, like energy prices going up and down
Exactly.
and changing regulations.
Right. Yeah.
So PPAs give both Constellation and their customers some certainty
Yeah.
so they can plan for the long term and manage their energy costs.
Precisely.
But what's in it for the utilities and companies buying the energy?
That's a good question.
Why would they sign these long-term agreements?
Well, for utilities,
Mhm.
it's a way to get a reliable source of clean energy at a price they know ahead of time.
Okay.
This helps them meet their renewable energy goals, keep costs stable for their customers,
Mm-hmm.
and reduce their exposure to changes in fossil fuel prices.
So they're hedging against volatility in the energy market.
Exactly.
Okay.
And for big corporations,
Yeah.
it's usually a mix of things. Saving money,
Mm-hmm.
meeting sustainability goals,
Okay.
and corporate social responsibility.
Right.
A lot of companies are pledging to reduce their carbon footprint
Yeah.
and switch to cleaner energy. By signing a PPA with Constellation,
Yeah.
they can ensure that some of their energy is coming from clean sources,
Yeah.
nuclear, wind, or solar.
So it's a win-win for everyone involved.
It really is.
Okay.
And it's a big part of why Constellation has been doing so well.
I see.
These PPAs have let them expand their clean energy portfolio
Mm-hmm.
and make consistent profits,
Right.
which attracts investors who want to be part of the growing clean energy sector.
The Motley Fool article talks about Constellation's projected growth, 10% compound annual earnings per share growth through 2028.
Right.
But is that realistic?
It's a good question.
What's driving that growth?
Well,
And are there any challenges they might face along the way?
that's a great question. And it takes us right into the next part of our deep dive.
Perfect.
We'll look at those growth projections,
Okay.
explore the potential risks and challenges,
Mhm.
and unpack the bigger implications of their nuclear power strategy.
Sounds good. Can't wait to hear it. Welcome back to the final part of our deep dive into Brookfield infrastructure and Constellation Energy.
Glad to be here.
We've talked about a lot,
Yeah, we have.
from those super cycles to those big growth projections.
Right.
Now I'm really curious about what this means for the everyday investor.
Yep.
What should they be thinking about when they look at these companies?
Well, that's a good point, you know.
Yeah.
It's easy to get swept up in the excitement of it all.
Right.
These mega trends and the potential for big returns.
Yeah.
But it's super important to remember every investment has risks.
Mm-hmm.
You got to understand both the good and the bad before jumping in.
Okay, so let's start with Constellation Energy.
All right.
Their projected 10% compound annual earnings growth is impressive.
It is.
But what's actually driving that growth?
Well, a few key things.
Okay.
First, the demand for clean energy is only going up
Right.
as we deal with climate change
Yeah.
and moving away from fossil fuels. Second, their nuclear plants are already making a lot of money.
Okay.
And third, they're in a great position to expand those plants
How so?
through new projects like that, deal with Microsoft,
Right.
and investing in new nuclear tech.
Like what?
Like those small modular reactors everyone's talking about.
Yeah, that Microsoft deal is a perfect example of how everything's connected.
It is.
It's wild to see big tech companies jumping into the energy game.
Yeah, for sure.
But what about the risks?
Oh, right.
The article said nuclear power is a bit of a political hot potato.
It can be.
Could changes in regulations or public opinion cause problems for Constellation?
Definitely, the nuclear industry is heavily regulated,
Right.
and changes in government policy could really affect their business.
How so?
Like new safety rules or waste disposal requirements
Mm-hmm.
could make things more expensive or even shut down some plants.
Yeah.
Public opinion matters too.
Yeah.
Nuclear power is getting more popular as a clean energy source,
Right.
but some people are still worried about safety and waste.
Yeah.
And that could lead to pushback against new nuclear projects.
So it's not just about the tech itself. It's also about navigating the political and social stuff around nuclear power.
Exactly.
Okay.
Constellation needs to be smart.
Yeah.
Addressing concerns, talking to policymakers,
Mhm.
and operating safely and responsibly to keep the public on their side.
That makes sense. It sounds like Constellation's success depends on more than just their tech.
Yeah,
They need to be good at dealing with those political and social dynamics, too.
exactly. And that's something investors should definitely consider.
Okay. So switching gears to Brookfield.
Okay.
What are some risks or challenges they might face as they go for growth in these super cycles?
One big risk for Brookfield is execution risk.
What does that mean?
Well, they have a lot of big projects planned,
Right.
and it's not always easy to deliver those on time and within budget.
I see.
Delays, cost, overruns, or regulatory hurdles could hurt their profits
Mm-hmm.
and their ability to achieve those growth projections.
That's a good point. And their diverse portfolio,
Yeah.
while it's a strength in some ways, could also be a problem if they overextend themselves
Right.
or if one sector doesn't do well.
You're right. Managing such a huge and varied portfolio takes a lot of skill
Mm-hmm.
and careful resource allocation.
Right.
If they try to do too much in one area
Mm-hmm.
or can't adapt to changing markets, it could hurt their overall performance.
So diversification's a double-edged sword.
Exactly.
Okay.
Another thing to remember is competition.
Oh, right.
Brookfield isn't the only one in the infrastructure game.
Right.
They're up against other big funds, private equity firms, even sovereign wealth funds.
So they have to stay sharp and keep innovating
Absolutely.
to stay ahead.
And they need to watch out for changes in interest rates, too.
Okay. Why is that?
Well, infrastructure projects often use borrowed money,
Right.
and if rates go up, their borrowing costs go up,
Mm-hmm.
which can hurt their profits.
It sounds like investing in these companies,
Yeah.
while it could be very rewarding.
Also means really understanding the risks
Yeah.
and weighing those against the potential rewards.
Couldn't agree more. It's not just about jumping on the trend bandwagon.
Right.
It's about looking closely at each company, their strategies,
Mhm.
and the challenges they might face.
Well, this deep dive has been super informative.
It has.
You've explored these two companies in detail,
Yeah, we have.
looking at their growth strategies, their potential risks,
Mhm.
and how they're taking advantage of these global trends.
Right.
So as we wrap up,
Okay.
what's one key takeaway for our listeners?
I think the biggest takeaway is that knowing about and understanding these big global trends
Like digitalization and decarbonization.
exactly can open up some really cool investment opportunities.
Okay.
But you got to look past the headlines,
Mhm.
dig into the details of each company, their management, their financials,
Right.
and the potential problems they might run into.
It's not just riding the wave.
Nope.
It's understanding the currents and being ready for a storm.
Exactly.
Okay. And as we've seen with Brookfield and Constellation,
Yeah.
those disruptions and changes can lead to some really exciting investment opportunities.
So to leave our listeners with something to think about,
Okay.
how might these trends affect other industries beyond infrastructure and energy?
That's a great question.
What other areas might see big changes and innovations in the next few years?
That's a good one to ponder. The effects of digitalization and decarbonization are far-reaching. They touch almost everything in our lives
Yeah.
and the global economy. It's a really exciting time to be an investor.
It is.
And by staying informed, doing your research, and thinking critically, you can be in a good spot to benefit from these huge changes.
Awesome. Well, thanks so much for joining us on this deep dive.
My pleasure.
We hope you've enjoyed learning about these companies
Yeah.
and the big trends shaping our world. Happy investing.